Hello and welcome to my daily reports market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday the 23rd of April. There's been a relatively quiet open, nothing too significant in terms of direction. There was initially a slight risk positive move that was going on. We had a decent close on the S&P 500 last night, breaking higher. We also saw that futures were mildly higher. They were more higher than they are now. We've just had out the, or recently had out the Eurozone and UK flash PMIs for April, and they were absolutely abysmal, just falling pretty much. Economy is just falling off a cliff in terms of the growth numbers, and just slowing completely to a grinding halt pretty much. In fact, let me just show you where those flash PMIs came in. Look at the composite ones are the ones we're interested in pretty much. But look at the service sectors of the Eurozone at 11.7, UK 12.3. So the composite numbers are 13.5 for the Eurozone and 12.9 for the UK. Now, bearing in mind that at 27 for 29 for last month, that was a run rate of around about for monthly GDP on an annualized basis, around about a 10% contraction for the Eurozone. So there's just absolutely huge decline in growth numbers that we're expecting through this coronavirus or COVID-19 pandemic that we have. And yeah, the UK has not done any better, in fact slightly worse on composite PMI. So we've seen that that initial risk positive move just ebbing away again, the euro under pressure down below 108 figure. We've also got today the EU leaders meeting to discuss how their recovery fund is going to be implemented, and the question would be how those leaders cope with the likelihood of renewed talk about debt mutualisation, which is always a contentious issue amongst the Eurozone leaders, and yeah, that's going to be a real could be a significant moment if we get some pretty negative headlines out of that meeting today. So we're looking at that, but also we're looking at this interesting rebound on oil prices. Now, I have to put this in context. WTI was at $20 closing on Monday. It's now 15. So in the context of that, yeah, I mean, it's significantly still weak. You can see that here. But it's interesting that we've got this recovery that we've seen in the last couple of days, and possibility of, well, I mean, like, technically speaking, this is a rebound, but yeah, I mean, bearing in mind that you're likely to get ongoing shortages of supply, which impacts on the oil price, is going to be a complete, yeah, oil price is going to be under pressure for a while, certainly, until COVID-19 really does start to dissipate. Yeah, it doesn't look as though the demand picture is pleasant at all. But oil prices have rebounded today, which have added into a little bit of settled sentiment today. This is an interesting one. Gold breaking out. Do a lot of gold analysis on our website, so go to the website to read all my fundamental and technical views on gold. But it's broken out back above $1,700 today on a decisive basis, and seemingly now pulling towards or eyeing the highs again at 1746. Technical implications I'll talk about in the video in a bit. But yeah, really interesting moves on gold. So yeah, that's broadly the roundup for today at the moment. So what we have in terms of data going forward today is the US data this afternoon, and we're looking out for initially looking out for the weekly jobless claims, which if I scroll down, you see coming in at 4.2 million. Now, again, bearing in mind where we've been in recent weeks, that is not a great number, certainly, but it's reduced from the 5.25 million jobs, 5.25 million claims of last week, but 6.8, over 6.8 was that really big number. well, I say really big, they're all massive, but relative to 4.2 anyway. And then we're looking out for the flash PMIs to the States at 245. Now, interesting. Remember looking at that UK and Eurozone data, those services PMIs were down in the low teens, or 12.9, I think it was. So not, I mean, relative to that, US service sector is not horrendous. So it'll be interesting to see how the market responds to if there is any downside surprise to these US numbers this afternoon, because there were big down surprises in the Eurozone and UK numbers, and maybe that sort of sets up for the expectation that you're going to get some pretty dreadful US data as well. We've also got home sales to the States, and that is at 3 o'clock, and that is going to be expected to fall by 15% in March to 645,000 new home sales. Okay, so that takes me on to my chart of the day, which is the German DAX. Now, DAX, well, across a lot of these risk plays, you've seen these recovery uptrends, which have now been broken by what essentially is now turning into a consolidation phase. This range that I've highlighted here on the DAX is indicative, really, of what we're seeing across several markets. Really, a little bit of a pickup in the DAX yesterday, aligned with a pickup in sentiment as well. That really did help to save the breakdown, or certainly for now, the breakdown, which would be completed on a move below 10,137. Now, I've been talking about this level of key breakout level support for a while now, and the recent couple of 3 weeks now. For 3 weeks, the downside moves on DAX have been sort of finding that support around the 10,240 area, and it seems as though that is again where we've seen the low on Tuesday before the rebound. Now, the problem I've got with this is these momentum indicators. It's certainly that recovery is over, or certainly that would be the suggestion on momentum indicators, where they're tailing off and starting to pull back. Now, the question is this a consolidation before another upside break, or a consolidation before a corrective move? That support at 10,137 is absolutely critical in that. Also, the momentum indicators, watch out for that. So the stochastics continuing to fall away. The RSI falling back under 45 would be a concern. And also MACD lines, if they were to negative bear cross. So these are the things that we need to look out for. There's a initial resistance of Tuesday's traded high at 10,525. That's around the midpoint of the range as well. So again, a failure around there and then turning back would be adding to the concern that this is potentially topping out. But certainly the number of negative candles that you're getting on DAX at the moment doesn't really bode all that well. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinar.